Morning, I'm Tom Elliott, and it's Tuesday, 30th of November. Well, global share markets last night were actually weaker. Now, the European Union has approved an €85 billion bailout package. Now, that will cover Ireland's problems. It may cover Portugal's, but the big issue in Europe is if Spain defaults on its debt, there isn't enough spare money in the EU to cope with that. So, unsurprisingly, share prices fell, the US dollar rose, gold was reasonably firm, and oil was up as well. Interestingly, referring to the US dollar, the A dollar is now back at around 96 and a quarter US cents. So a few weeks ago we had parity plus, but whenever people are uncertain about things, and of course what's happening in Korea between North and South Korea isn't helping, the US dollar goes up. As I mentioned several times, take advantage of the strong dollar while it remains so, because as 2008 taught us, it may not last particularly long. In shares, well, Telstra shareholders, it seems the structural separation of the company will be approved by the Australian Parliament. Now, Independent Senator Nick Xenophon has said he still has some reservations about the whole deal, but it's becoming increasingly likely that Telstra will be split into a wholesale and retail arms. Effectively, the wholesale arm will become part of the national broadband network. What this means for Telstra's earnings long term is still very difficult to say. It will have to compete along with other retailers on an even basis with the NBN. And well, that could make life pretty tough for Telstra because it isn't such a vigorous competitor when it comes to areas like mobiles and broadbands, where the competition is pretty strong. Qantus shares have remained under pressure. The company's run of outs in terms of mechanical issues just goes on and on. The CEO, Mr. Joyce, keeps saying it's not Qantas's fault. That only begs the question, well, if it's not their fault, whose fault is it? Now, with the Airbus A380, it was Rolls-Royce's fault, but with other mechanical issues, it seems that Qantas's decision to start outsourcing maintenance and sending it overseas may have started to backfire. There are big bets going on in the commodity markets at the moment about the oil price. Now, as I mentioned, oil was stronger overnight. It's trading around 86, 87 US dollars a barrel. And look, it was a couple of years ago, I remember it went to 160 US dollars a barrel before coming back as a result of the global financial crisis. But options markets in the US are seeing an inflow of people putting money on the possibility that oil could go back through 100 US dollars a barrel as a result. Unsurprisingly, share prices of companies like Woodside, Santos, Oil Search have been reasonably firm the past couple of days, even though the overall share market has been a bit weak. Banking stocks were all weak this morning. Now, the National Australia Bank has had a terrible time trying to explain its payments problem. They say it's all sorted out. I'm not really sure people believe that at the moment. The issue, of course, with the payments problem is that if people don't get their paychecks on time, then other commitments like credit cards, home mortgages, car payments and so forth that often come out of people's accounts the day after they get their pay packets, those payments can't be made, and that sends off a sort of a ripple effect through the financial system. So it does show just how important banks are, and if a big bank has a problem like that, well, that's actually bad for everybody. Again, unsurprisingly, bank stocks weaker in morning trade. So overall, shares still trading sideways. I think they'll continue to trade sideways through Christmas and beyond. Quite often share markets have what's called a Santa Claus rally. And my view is Father Christmas might be just staying at home this year.